Hello and welcome. You're watching India Market Close here on NDTV Profit. Let me start off with how the Nifty is doing today. We're having a flat day, at least on the Nifty, just about 12 odd points lower versus Friday's close. Let's look at it intraday as well. 25,400 is what we're fortunately holding on to. But look at this, just an 80-point band in which the Nifty is trading in. So it's a very tight band that we're trading in. Don't go by the gyrations on your screen. It's just a very, very tight band that we're playing, which we've zoomed in, and therefore you're seeing that. But broadly, otherwise, you're seeing the highest point, and we're just off probably the lows of the day is the way we're looking at this, but just about 40 points higher. So very, very tight band. Let's look at the heat map of the Nifty, see which stocks are moving. And HUL, Tata Consumer, Nestle, that just shows the strength that FMCG and the resilience that FMCG is showing today. It's a rotational play, mind you, and FMCG has come to the forefront in trade today. 0.5% higher on Trent as well, so that one also kind of adding tailwind to consumer. What's not doing well? Some bit of a cool off in a BEL. Tech Mahindra also down around 2 odd percent. Eternal, there's been a change of guard there, and that one is also down 1.5% nearly on the back of that news. So some movers over there, but again what we're seeing is no big movers either on the upside or on the downside, at least on the Nifty 50 counters today. Let's look at the contributors, and I'm curious to know that because I want to see where the heavyweights are moving. Reliance is one, okay, but outside of that, no major movers on either side that you're seeing. Now, I want to look at sectors as well before I go to broader markets and try and break that down. FMCG is doing, of course, no surprise, but the top sectoral gainer in trade today, 1.5% higher, doing extremely well for itself. Media, defense, metals are places where there is some bit of a cool off that we're seeing. Metals, defense in particular. I want to talk about the advanced decline and thereafter how broader markets are doing. There you go. The advanced decline has just gotten more and more pronounced, as you can see, as the day has gone by. I'm curious to know whether it worsens from here. Can we taper out from here? How does it play? Let's look at the Nifty mid cap and the small cap indices, and 1/3% lower on the Nifty mid cap, so we're at the day's low. No surprise there either, and very similar kind of a texture on the Nifty small cap as well. Again, 1/3% lower. So that's where some bit of underperformance is, but mind you, these broader market indices have outperformed the index last week. So that's something on the back of which we're seeing the kind of move that we're seeing today. It's a small move nonetheless, but let me bring on board Akshay Bhagwat to get us better perspective. Good afternoon, Akshay. How are you seeing both the Nifty, the Bank Nifty, and the markets? It's a continued consolidation of sorts on the back of last week. How long do you expect this to last for?
Good afternoon. Yes, it's been a lackluster session, and the last few trading sessions have been a bit dull, and there has been some bit of a pressure on the indices, but still we cannot call it any reversal or signs of any major fall, because the level of 25,250 to 300 basis spot Nifty is one of the most crucial levels here to watch from a broader perspective. In all sense, if you look at the prior trading session, that's Friday, we recovered from around 27,350 400 zone. So that defines the immediate support, and just although it's lackluster, my sense is that Nifty has a probability of recovering back, pulling up again, and you might see it heading for levels of 25,600 to 650 zone. Even if you look at the Bank Nifty, although there is no trade set up here, clearly it's in a range, but somewhere there was some strength which we saw on Friday, and there can be a follow-up move which can see the Bank Nifty heading for 57,300 on a short-term perspective. So still positive on the indices, expecting a recovery from the current levels.
So recovery likely at play, at least on the Nifty Bank. Akshay, give us your take with regard to, or just let's take a step back. Give us your top picks for this afternoon.
Yeah. Both the stocks I have selected are on the buy side of trade. Now, the first one is from the real estate pack, that's DLF. Again, if you look at the last few trading sessions, it's been lackluster and quiet, but my sense is that a strong support is being set around the levels of 835. And technically, this stock is again setting up for a strong upside momentum where 857, 871 can be the possible upside targets. You can keep a stop loss of 818 on this buy trade. The second trade is in Petronet LNG, where if you look at the chart structure today, there is some momentum pickup, and the way the setup is 315, 321 can be the possible upside short-term trading targets. You can buy this with a stop loss of 298. So yes, I'm still hoping that although the market breadth is fading off, these two stocks should do well in the short-term time frame.
Akshay, what changes in FMCG? Because you're seeing that very strong move in FMCG counters. Are you seeing something structural here in terms of a change? Because FMCG is one of those laggards, right? So is that apparently going to change in your opinion now?
Yes, if you were to see from an entire July perspective, yes, FMCG has been a laggard. If you look at the index per se in the last couple of months, it's been sideways. There has been no major correction though. It's just that many of the stocks from the FMCG pack have been trading on low volumes. They have been sideways, but there is no intent of any fall. It's just that the money flow has shifted lately into the FMCG and the pharma space. That is evident. Pharma was the sector which kicked off few days back, and in the last couple of sessions, FMCG is making a comeback. So if you look at the index where 55,550 is where the FMCG index trade, there is a good trade or a good setup where you can see stocks like 59,000 on the index, with stocks like an HUL, a Dabur and a Marico all supporting this index, and where this index can easily go till around 59,000. So yes, betting on FMCG space for the month of July makes a lot of sense. Risk reward is extremely favorable if you buy them at the current levels.
Okay, thank you, Rajat. Thank you so much for that, Akshay. Thanks for joining us this afternoon. We'll let you go on that note because we're going to be joined in corporate conversation. We have Rajat Rastogi with us, CEO West and Commercial Assets at Puravankara. Welcome, good afternoon, Rajat. I want to first start off with that big win that you've had. Yes, that big win that you've had in Mumbai, 2100 crore GDV potential project. Talk to us a little bit about that. It's a large win in relative terms for you. How quickly do you execute this and how quickly do approvals come in place, more importantly?
Good afternoon to all of you, and thank you so much for having me on your show. So yes, it is indeed a big win for us with a GDV value of almost 2100 crores. I think the total cost of the project is approximately 1600 odd crores, and we intend to launch this project in a period of around 9 to 12 months from today. Chembur is indeed an important market for us. We already have a project in Chembur wherein we are obviously one of the best products available in the market, and this product in Deonar Bagh adds to the portfolio over there.
In 9 to 12 months, Rajat, how quickly do you estimate completion in another maybe 2.5 years thereafter?
Yeah, no, I think the completion takes time. It's a large project. It's maybe 1.2 million square feet that we're developing over there. The overall timelines is going to be between 48 to 54 months.
Got it. And does the sale also happen in staggered fashion? So your 2100 crore of GDV realization is likely going to happen in staggered fashion. Just give us context on how it will happen over maybe, because it's a large period of time. Just give us that broad level understanding. Roughly 500 crores a year?
Yeah, exactly. I think that you're right. So it's going to be around 500 crores a year. And as I said, Chembur is performing very, very well as a market. And I told you that our project itself is one of the top leaders in that micro market. So we see the sales happening directly from day of start of the project. And depending upon the market demand and how the pricing moves, we look at least selling of most of the inventory in a period of at least 3.5 to 4 years.
100 crore out of the way, Rajat. What next? What's the FY26 pipeline looking like in terms of new development that you're looking at in terms of GDV? Just give us a number broadly.
So this year looks very, very positive for us. And we've obviously started in a very positive way with securing this right. Just to give you a perspective about what we're doing in our West region portfolio, we today have a GDP value of already crossing 18,000 crores in the West market. We all have a portfolio of close to 14 million odd square feet between Bombay and Pune, where we are predominantly present in the West. And bulk of this is a substantial portion of it is also on the redevelopment portfolio, which contributes around 7,500 or approximately of the overall GDP value. So we have a very, very strong pipeline for the balance of the year. We as a company strategy, we are focusing only on strategic marquee assets, and that's where the company's focus is going to be. And we're going to be focusing primarily on all the three segments, which is land buys, JDAs, and also in redevelopment. So our strategy is very much aligned, and I think, as I said, that the year looks very, very positive for us.
This one has roughly a 20% margin. Do pretty much all your projects have that kind of number under the JDA model as well? Do you have that kind of number?
So we have established margins for us internally, which we follow with regards to every asset class and every product type that we do. But yes, one of the key focus areas for the company is on the healthy margin side, and that's we enabling it. So yes, to answer it, most of the projects have better, equal. I mean, depending on the product life cycle of the product, we decide on that. But it's all about in the near range of what you spoke.
Is there a preference as to which model you prefer within the three?
No, frankly, we're agnostic. We're looking at market opportunities. We're not stuck on any particular model, but I'm very, very glad to share with you that we are doing a lot of marquee redevelopments in Mumbai. We are doing a lot of developments in Pune as well, not on the JDS or on the redevelopment side, but normal development that we are doing. So we kind of, as a strategy, as I said, that it's more to depend upon what product and where do we create and where it lies in the overall strategy of the company is what we acquire. But right now, as I said, that redevelopment, yes, Beach Candy, Andheri Lokhandwala, Pali Hill, and now this one, I think adds a strong portfolio for us.
Now, Rajat, you've done a top line of around 2,000 crore last year. So as the focus shifts towards execution, you have a large pipeline, of course. As it shifts towards execution, how is that playing out? What's the FY26 execution guidance looking like?
No, I think as a company, we are obviously very much focused on our execution capabilities. We obviously are delivering our required numbers of inventory in terms of position across all the markets, especially in Bombay and Pune. So execution is going to be key for our success in primarily in the West region is what I can speak. And also, I think on the overall numbers side, our execution in terms of the burn rate that we speak about, we are going to be growing a burn rate by at least 2x in the West region in this financial year.
And what's the thought process with regard to balance sheet borrowing that you have, Rajat? Is there a plan to repay that? Are you in a first off, are you in a position to answer that? And if so, can you give us the kind of thought process with regard to repayment of debt?
So I'll give you a broad semantics on this. Sure. Our borrowing levels are very much in the established limit that we have defined for ourselves. Bulk of the investment that we have done in last couple of years has gone for acquiring huge land parcels across various centers that we operate from, and much of this debt is going to get reduced in the coming years, in the coming period, over from the sales that is going to happen from these projects. So we are very much comfortable with the debt positions. We don't see any pressure on that, but we are very, very hopeful that once these projects, 7-8 of them, get launched over a period of time, our debt position will fall further substantially.
Okay. Rajat, any guidance that you can give us on the top line number for FY26, or that won't be possible?
That won't be possible. We are obviously looking, the first quarter just ended and the first quarter has gone well for us, is what I can say. Sure. We have a very, very strong pipeline for the launches in the Q3 and Q4, where the bulk of the sales is happening. And we're definitely looking at a very, very strong financial year in terms of the top line this year.
Do you execute your entire GDV, if not for the entire company, even for the West Zone, if you can give us that perspective?
Sorry, can you please pardon the question?
How quickly do you execute the entire GDV that you currently sit on, Rajat?
So our current GDV is going to be executed over a period of between 4.5 to 5 years. Some of these projects are really large scale projects, especially the one that we're doing in Thane, for example. It's a 3.2 million square feet project that we're doing in Thane. Couple of them are projects which are really marking in terms of the areas that we're doing in Pali Hill, which have to be done in a period of around 4 years, 4.5 years. So from a overall perspective, you're saying my entire 18,000 crores worth of inventory should be executed in a period of around 4.5 to 5 years.
And Rajat, what's the internal IRR metric that you all look for when you all pick up projects?
Yeah, we have established numbers that we have. We have a committee which approves our investment positions that we do in various assets. And from the IRR perspective, we are comfortable in anything which is upwards of between 20 to 25% is where I think we look at assets. Of course, depends upon which life cycle, which strategy, which micro market that we're entering into. That is what we look into. But overall, I think our internal guidelines are something that we keep in mind before acquiring any project.
And on the commercial side of things, how are things moving along and what's the growth and the project pipeline like?
Brilliant. I think the commercial portfolio is doing very, very well.
Sure.
This year, we're looking at delivering close to 2 million square feet of commercial projects. We are currently focused on Bangalore right now, where we have 2 projects and we'll be starting the 3rd project very soon. We're obviously looking at strategic growth paths in other CBD areas of Mumbai and Pune. And that's where I think we are looking at more acquisitions. But the market overall is doing very, very well. And we are very buoyant about this portfolio. I think from what we have also spoken about in our investor deck is the fact that by 2030, we're looking at least 400 crores from our current inventory to come as annuity rental income.
Okay. Rajat, if I were to push you to give us a guidance with regard to how quickly does debt come down, or what's the target debt number that you have over the medium term, what would that number be?
So we have our internal target, which we're going to subsequently speak about in our quarterly results that will be announced very soon. Sure. We're going to give you a detail. But what I can assure you is the fact that our launch pipeline is very, very strong this year. And because of the collections that we're going to get from the sales, our debt numbers are going to be going down reasonably this year.
Okay. All right. Rajat, thank you so much for joining us. We'll let you go on that note. Thanks so much for coming in, speaking with us.
Thank you so much for having me online. Thank you.
Yeah, no, completely our pleasure. But just a couple of stocks flying around. We have an Equitas Small Finance Bank. Those numbers not impressing the street. The stock is down 6% in trade. Jubilant Food has been down since the start of the day and now has slipped a little bit more. And we'll talk about some of these names, frankly, because we weren't able to talk about specific names at the start of this show. But those are some names that should be on your radar. 2% low on an ESAF and Utkar Small Finance Bank. Some of those names also in the thick of things. Shyam Metallics is down nearly 1%. Again, quarterly update on Shyam Metallics. But of course, stock of the day is going to be Godrej Consumer, and we're going to talk about that in just a bit. But let's switch tack. If you want to invest in India, invest in large cap quality stocks is the word coming in from Saurabh Mukherjee, founder and CIO at Marcellus Investment Managers. Listen in as he explains the reason why.
Most Indian fund managers have rung the alarm bell on small caps over the last year, right? Every Indian fund manager I speak to has rung the alarm bell on Indian small caps a long time ago, right? Honestly, you don't have to be an institutional investor or a fund manager to see the risks in Indian small caps. As I said, valuations are rich in Indian small caps, some of the highest valuations ever seen in small cap in our country. The economic slowdown is in front of everybody. The earnings slowdown, more importantly, the earnings slowdown is in front of everybody. Therefore, the risks are elevated, right? You've got rich valuations and you've got a small cap earnings slowdown. So I think several fund managers have rung the alarm bell. If someone's insistent that I want to invest in the Indian market, then look at large cap quality. Large cap quality is at an awful 5 years. I know because I invest in large cap quality. Large cap quality is an awful 5 years. But as the economy is slowing down in our country, large cap quality is resurfacing, right? An example being HDFC Bank. So I must have spent many years on your programs justifying our investment in HDFC Bank. We hardly made any money on it through 2021, 22, 23. It's only in the last 12 months that our HDFC Bank investment has borne fruit. And that's exactly as you'd expect. As the economy slows down, investors are migrating from lower quality financials, lower quality banks towards the champion play in the sector.
Okay, so that full conversation with Saurabh Mukherjee, of course, is something that you can see on our YouTube and our other socials. But Harsh, I just want to point out where that conversation started with.
Yes.
We finally asked him, what will you buy in India? And he said large caps. But he started by saying, this is the time to diversify beyond India. Go to your brokerage app. There are enough options there. Look at buying European small caps.
Yeah, small and mid caps.
Yeah,
yes.
small and mid caps. So he's very clear that he's not bullish about buying in India right now.
Yeah, and that was fascinating. US, he's been bullish since a while, actually.
Yeah.
So, and they've launched their US fund, etc. But this was new. This Europe mid-cap, small-cap was something which was
Maybe
new.
Maybe it's a new leg of things that, you know, when we talk to our European guests, when we look at the European markets, maybe we need to start looking at what small and mid-caps are working there. He also talked about how Dixon was a missed opportunity for his fund, but it still looks very strong. And on Jane Street, the comments on Jane Street were interesting because he said there are many others who are on Dalal Street who are doing what Jane Street was doing. Regulators going to go after them, and that party is over, especially in small cap stocks which are illiquid but were moving on one or two news items in a great quantum. So very interesting insights there from Saurabh Mukherjee. We'll take a very short break, but we'll come back with much more, tell you about what's buzzing this hour and what your last hour trade should be. Stay tuned.
जनता के पास सवाल ही सवाल है, जवाब ढूंढने को वो देखती है न्यूज और देखती है यहां तो सवालों का मायाजाल है। ऊपर से ये अलग फाइट है, कोई पूरा लेफ्ट तो कोई पूरा राइट है, बीच में मुद्दे के साथ कौन है, जनता को जवाब चाहिए। इसीलिए सवालों की परेड नहीं, मैं लाऊंगा खबरों की कचहरी। मैं शुभांकर मिश्रा, मेरे साथ देखिए कचहरी रात 8 बजे सिर्फ NDTV इंडिया पर।
It's the biggest event that markets and economy are looking at. A possible trade deal between India and the United States, which we could hear about any time soon. It will create a seismic shift in the way these two countries trade with each other. Who is going to come out on top of these hectic negotiations? Stay ahead on the story. Catch all the breaking news and the analysis only on NDTV Profit.
Imports become the exception rather than the norm, and increasingly we do almost last year, for example, of the contracts that we signed of record 2,09,000 crores, 81% was awarded to the domestic industry. Our intent is to manufacture in India, preferably with design also in India.
I am so elated to be on the same screen as the Defense Secretary, and I get a chance to talk about what he said.
In certain areas, like for example, artillery guns and armored vehicles, or in some categories of missiles like the BrahMos and the Akash, we've come of age.
What Defense Secretary Sir said is 100% true, and today private industry can really increase their involvement in R&D.
I am very proud to say that we make in our categories that we have been supplying to our defense force.
Welcome back. You're watching India Market Close. Markets right now are in a freeze frame, if that's one way to describe it. I mean, just pull up the Nifty, completely flat on the Nifty, completely flat on the Sensex. IT stocks are those that are feeling some pain, but that too, I mean, just about 0.5% down on the Nifty IT. Banking stocks not showing any movement. I mean, it's a glacial pace. One of the reasons could be twofold actually. One could be we don't know what's happening with the India-US trade deal yet, and the second is this Jane Street spill over? In fact, Deepak Shenoy joining in to talk on this and much more. He's the CEO of Capital Mind Mutual Fund. Deepak, unfortunately, we couldn't get that line up. We've been trying for a bit, but I think technology has got the better of us today. But great to chat with you on the phone, as always. I just want to start by saying what your sense is of the reaction to Jane Street in terms of large investors. Are we going to see muted volumes on the derivative side for a bit and in the cash markets as well as a result?
The volumes in general will likely come down if these. So the way they seem to have described a lot of these positions is that a lot of positions were created on index expiry day in order to gain a disproportionate benefit using their options positions. So some of the cash positions were created, some of the futures positions were created to benefit from options. So in that context, during expiry, I would expect, and the first expiry actually happens now tomorrow, because now weekly expiries are only between Tuesdays and Thursdays. So the difference, we will only know tomorrow whether this creates a reasonable difference. And as we seem to be hearing, there's another hedge fund that seems to be in the crosshairs. So there might be multiple people employing some technologies like this, and given that it takes only a few thousand crores to be able to manipulate stocks during trading day, that might result in relatively lower volumes if these volumes were not artificially created just to move stocks during expiry day. So
I'm very curious. I'm very curious about what you're hearing, Deepak, on this other hedge fund which is in the crosshairs. Is it a domestic hedge fund? Is it a global hedge fund that's going to be the next Jane Street? Because clearly this was not a secret sauce that only Jane Street knew about.
Yes, in fact, the thing came about because Jane Street sued Millennium. Because Millennium hired, I think, a bunch of people from Jane Street, or Jane Street hired from Millennium. I don't know which one it was, but essentially there was a court case in which they said, your people, you hired people who stole our very profitable index options trading strategy in India. And that's when SEBI also kind of said, wait a second, what are you talking about? And are you guys manipulating the markets? We need to check. They've checked just 3 days. There have been a lot more expiry days since, that they can check. And presumably what they've found right now is a few thousand crores. They might find tens of thousands of crores. But the other hedge fund, which was named in that court case, was Millennium. And Millennium also has a large trading position in India. So, and I saw an article today that said they're also in the crosshairs, but it makes sense because if SEBI went after X, they'll also go after Y because they were both named there.
Yeah,
so, yeah.
Okay, so correct. So it could be Millennium, it could be Jane Street, it could be others. Deepak, I'm just wondering how much of a mover do you think this India-US trade deal is going to be? Already expectations are being managed that if at all, it will be a mini deal. It's fairly clear. I don't think we will be one of the recipients in the letters that will go out tonight India time. Hopefully not. But whatever form and function that deal comes in, it's quite safe to say it won't be at the 26%. Anyway, the deadline's also moved. Do you think that that's the next trigger the market's waiting for?
Well, to be honest, at this point, it is fairly clear that Mr. Trump is not in any way predictable or dependable, because he might say 26% today and wake up tomorrow and say 50%. So it is better for us to start expecting that the US in the near future and perhaps in the coming few years is not going to be a dependable partner. They are a waste of time from us to keep thinking about. Although it may have short-term repercussions, we should just start thinking that they are applying a lot more tariffs on us and we don't care. And we should start looking at the rest of the world if we're looking at exports, or just domestically focus on increasing Indian market shares of Indian companies, because there is no trustworthiness left in the US. So what happens today and tomorrow and all that stuff will be newsworthy. But I don't think it will last more than a couple of days, because there will be more statements. Now made another statement saying BRICS something 10%. Now we don't know what that means, but it means nothing, because if they give you a trade deal and tomorrow they say no, you're parts of BRICS, so we'll charge you another 20%. It's just news making for the sake of it.
Yeah.
But I think we're in better shape than that. We don't have to, think of the US as the only partner that we have.
Yeah, I mean, it is become the big move, sort of a reason for the markets to hold their breath. Meanwhile, those dual factors may be weighing in. Thank you so much, Deepak. We always enjoy our conversations with you. All right, that time of the afternoon where we get Samit Sarkar in with all the chatter from the dealing room. Samit, what's the buzz today?
Well, the stock that has been buzzing is Bharat Electronics. If you see, the stock is down around 2.5%. Now, dealers are indicating that there are sell flows on the DI desk in trade today when it comes to Bharat Electronics. And one of the concerns that dealers are indicating here is that the company's valuation is at a lifetime high, and that is one of the reasons why there are sell flows on the DI desk when it comes to BL. Second stock on the list is ICICI Lombard. Dealers indicate that large HNIs have started to accumulate this countdown expectations of a potential price hike announcement that could come in. Now everyone knows that there will be a price hike that will come in, but dealers are expecting that to happen in the next 1 week or so, and hence there are buy flows on the large HNI desk. When it comes to Shriram Finance, dealers are indicating that there are buy flows on FI desk at lower levels in trade today, so keep an eye out for Shriram Finance as well. When it comes to Ganesha Housing, that stock has hit an upper circuit of 5%. The stock had been under pressure for the last 1 month or so. However, dealers are indicating now that the sell flows are largely over, and there could be a bounce back that we can see in the share prices of Ganesha Housing. Another stock on the list is Orient Pro Solution. Now that stock is up around 12% in trade, or at least it was up 12% at one point of time, and dealers are indicating that HNIs have been buying this counter in anticipation of a large order win announcement that could come in anytime soon, and hence the stock has been buzzing and gaining. At one point of time it was up around 12%.
Okay, thank you for that, Somit. Plenty to look out for, and we'll quiz our guests as well on some of the observations that you're making on some of those counters. Let's bring in Hemen Kapadia, DR Choksey FinServ, joining us live. Hemen, quickly give us your take with regard to the index. We've seen a bit of a consolidation move over the last maybe 6 odd trading sessions, maybe more than that actually. But what's the sense like? How long is this going to go on for, in your opinion?
A very good afternoon to you, Harsh. Thank you for having me on the show. So it's a pleasure. Well, after a breakout from 700-point range, Harsh, in the 7th week, one would have expected more. But market is taking its own sweet time. I'm not sure how long it's going to take for this to end, but the bias remains positive. The undercurrent remains a bit, but we need to take out a few levels. And one thing in the bull's favor is, despite we not doing anything and we've been down for 5-7 trading sessions in a row, the VIX refuses to go up. That is a small positive. Bank Nifty hasn't done much, but it needs to do a lot to go up. So frankly speaking, I'm not sure why it's taking such a long breather, but just one point to note, as long as we are about 25,212 in terms of closing, everything is hunky-dory. If we slip down and close below that, that would be a point to ponder and a point of worry also, Harsh.
Okay, and Hemen, give us your take. So if this were to last, which way do you expect it to break out? On the upside, I suppose.
Yeah, I think, and I would expect it to break out on the upside.
Okay.
25,550, 25,800, 26,277. I like to digress a bit. Nasdaq is at an all-time high. I think S&P 500 is at an all-time high, and the Dow Jones is threatening to do something unprecedented. So, I believe there's always a spillover effect. Though the dollar index is down, our rupee hasn't appreciated much. Crude is down. Everything seems to suggest that, But on the other hand, silver is looking good. I think we are poised. I'm not sure what we are waiting for, but I would be more positive than negative, Harsh.
Okay, more positive than negative. What are you picking in that positive sentiment, Hemen?
Okay, firstly, a buy call on Bajaj Auto. Bajaj Auto hasn't done much. This is, I think, the 1, 2, 3, 4, 5, 6, 7th week where it's virtually hatching eggs, doing nothing. Things are now beginning to turn positive. Oscillators on the daily chart have given crossover buys. It's also expected to close up at the 55-day exponential moving average today. It's made a base, it's forming a rounding bottom. Everything is looking nice. So buy on Bajaj Auto at 84.50. Stop loss 83.50, target of 86.50. The other stock is Titagar Rail Wagons. Looks very interesting. I'm not sure why it has not done anything for the last half a dozen weeks, but seems poised for a breakout, straining at the leash, so to speak. Yeah, for this to have unfold, we need a close about 955. But I have a feeling it looks great. One can buy Titagar at 945, stop loss 925, target 995. 995 is a very modest target. I believe we should be heading towards 1050 and 1200 over the next few months, Tavanna.
Okay, Titagar Rail and Bajaj Auto on the radar, but it feels like it's a pause. Everything is in a bit of a freeze frame. Till you have one of these news developments out of the way, and that is the US-India trade deal. Now, is it a rough patch? Is it a speed bump? Where do we stand? My colleague Rishabh joining in with the latest. Rishabh, what are you hearing?
What's confirmed, Tamanna, is the fact that there will be no more rounds of negotiations. The ball is very much in Washington's court now in terms of whether to accept this interim trade deal or a mini trade deal. What we've also picked up over the last 4 or 5 days is the fact that this will be a limited deal. It will only cover goods for now. All the other sticking points, all the other discussion points like agriculture, dairy, things that will take a lot more time to negotiate on and to achieve any sort of middle ground or consensus on, all of that will be kept out of this current interim trade deal that is on the cards. That will be postponed for further tranches that we'll see. We'll see one perhaps in September or October of this year, and then the full final FTA coming in about a year later. So that is the sort of timelines we have. In terms of scenarios, of course, if India is able to grab a deal before the July 9 deadline, that means India will be able to get some sort of broad tariff reductions on the reciprocal tariffs that were imposed by the Trump administration. We can expect a mini deal on that front. Another scenario is that if India is not able to get any sort of a deal, tariffs may revert back to April levels, that is the 26% tariff level. And additionally, today morning we heard the BRICS announcement coming in that Trump believes that BRICS is anti-American in its policies, and an additional 10% tariff could be levied on India. So that takes the total to about 46% if we add everything up, and that is perhaps the worst case scenario for India. That is something that might happen only post-August 1st. So some sort of a delay also in the implementation of this tariff pause deadline that was initially set to end on July 9th. So those are some of the scenarios that we are seeing brewing currently. Also, what's very important, 9:30 p.m. tonight, tariff letters will be sent out by the Trump administration to about 12 to 15 countries, and that is something we have our eyes peeled on so far.
Okay, all right. Thank you for that, Rishabh. That's the update coming in, valuable one with regard to trade talks, because that will be the big focal point with regard to where markets are concerned. Was going to happen in this week, but clearly not happening now. That seems to be the consensus. But I'm going to quickly go across to Mahima, because we are going to talk about the stock of the day, which is Godrej Consumer. The stock is buzzing on the back of course, a decently strong Q1 business update. I'll hand it over to Mahima to take us through that. Mahima.
Right, so it's been a day for consumption for sure today, and Godrej Consumer is one of the stocks that is definitely doing well in trade today from the entire consumption pack. Now, with regards to where the business update stands, overall standalone business is set to deliver a high single-digit growth in terms of value and a mid-single-digit growth in terms of its volume. They've said that the overall standalone EBITDA margin in Q1 is likely to be below the company's normative range, but it is likely to improve in second half of FY26. Now, with regards to the segment-wise performance, home care business is likely to deliver a double-digit growth, which is a good thing for Godrej Consumer, and personal care business is expected to grow in low single digits in terms of volumes. Now, this is largely because of the soap it's not doing well for the company in this particular quarter. In terms of guidance, FY26, they'll deliver mid high single digits in terms of the underlying volume growth. Overall, high single digit consolidated revenue growth is what they're penciling in. And palm oil prices have moderated, so that will have an overall impact in the second half of FY26, because that is when the entire price hikes and plus the mileage reduction cycle will be completed, and then we'll see some kind of uptick in the margins going ahead. Now, in terms of what brokerages are penciling in for Godrej Consumer, Macquarie is maintained neutral with a target price of 1200. They're saying Q1 release points to healthy domestic volume performance, expects a 5% volume growth, and consolidated sales up around 10% is their expectations. EBITDA should rise 7% as margins remain under pressure is what they're saying. Morgan Stanley, on the other hand, has maintained overweight with a target price of 1431, and what they're saying is that Q1 business update is a strong beat. Double-digit growth seen for home care is a big surprise for them. So this is the overall view as to why the stock is buzzing in trade today.
And buzzing and how. And I think last few quarters has been good for Godrej Consumer relative to the rest of the pack under the current management as well. Siddharth Khemka joins in on the conversation this Monday afternoon. Siddharth, great to speak with you. Let's talk about the big theme today, which is consumption buzz, and start with Godrej Consumer that we've marked as stock of the day.
Yeah. Hi, good morning. Good afternoon. Thanks for having me on the show. Yeah, I think if you look at the overall consumer space, some of the business updates that have come out have been encouraging, and that is what I think was expected this year, where with the start of the budget, we thought that this year the pivot could be towards consumption theme, right from capex theme, and with the monsoon coming out to be stronger and much ahead of time, I think that is also supporting the overall growth trends. So if you look at even a Godrej Consumer, there has been a good growth in the domestic market right after Marico, where also we saw good growth in the domestic market. International business, especially for Godrej Consumer Indonesia, I think they are facing a significant increase in competition across categories. And the other regions are also, so except for Indonesia, I think the other international regions, they are likely to deliver strong double-digit value growth. So overall, at a consolidated level, revenue growth is back on the high single digit compared to the decline that we saw. So last year, Q1 was a decline of -3%. Q4 was a growth of 6%. So on back of that, I think consistently, even last quarter, they have been providing good business updates, and the segments that they are present in, that is also looking pretty interesting in terms of growth. Some of the newer segments that they have got in, and especially some of the personal care, home care has seen a strong broad-based growth trajectory and is likely to deliver double-digit both value as well as volume growth. So we remain positive on Godrej Consumer. We currently have a buy rating and a target price of 1450.
Okay, so Godrej Consumer looking fabulous, but so is Dabur, Jubilant. Let's pull up Jubilant and see what's happening there. Jubilant had started off pretty slow today, but it's continued to suffer going forward because their growth is just, seen a really painful situation. Jubilant is what I'm talking about, Dabur as well. As we look at the consumer space overall, Siddharth, apart from a Godrej Consumer that you spoke in detail of, anything that you like here? Do you think that this is sort of a defensive play that we're seeing for the day, or do you see more legs to it?
Yeah, I think definitely it looks like more of a defensive play in the current environment. Domestic driven factors are definitely positive. If you look at segment wise, paint adhesives expected to remain weak in Q1. Liquor, or you can say beverages, that is expected to see some volume growth in Q1. And if you look at in terms of staples, not much material uptick in demand is expected again in Q1 because of is this a recent trend that continues, and we expect post monsoon once the festive season comes up. So H2 is where bulk of growth will happen. For our overall coverage under staples companies, we are expecting a sales growth of about 6%. So a mid-single digit kind of a growth. What we like overall, I think QSR, especially some of the selected ones, for example, Jubilant, that came out with a good business update. Jewelry, again, with the pricing, gold pricing surging above 30-35%. the retail market. I think that has led to some volume that is not that strong. So overall, I would say that better to stick with some of the staple names in this environment. So Dabur, Godrej Consumer, Tata Consumer, which has a mix of food, beverages as well as staples. These would be some of our preferred picks within the FMCG space.
Okay, Siddharth, firstly, good afternoon. Keen to understand what your key takeaways from the numbers that have come out and some of the commentary also that's come out, because it's interesting. Rural, urban, give us your take. How best would you play FMCG given all the commentary that's coming out? How best would you play that?
Yeah, I think definitely. I think urban, we are seeing a kind of a muted volume growth, but I think rural is where things are picking up. As I said, overall, staples volume growth is likely to remain in the low to mid single digit. Price hikes there has been taken in Q1 that should aid overall revenue growth, and even on the margins front, we are expecting the gross margin contraction of about 170 basis points on gross margin front. EBITDA margin for the entire staples coverage universe should contract by about 130 basis points. This is largely due to high inventory cost in terms of palm oil, edible oil, tea, wheat, as well as negative operating leverage. As I said, in this environment, some of the sub-segments which are directly related to the crude derivatives, I think that is something which is looking better in terms of margins. So soaps, detergents, hence you will see numbers coming out better for a Godrej Consumer. So again, a little bit diversification from the core staples, food, beverages, that is also looking pretty much steady, and hence Godrej Consumer which is largely a soap story, plus a Tata Consumer which is a mix of food, staples, as well as beverages. So those kind of stocks are something that we are looking better in this environment.
Okay, Siddharth, point taken, and I'll come back to you because I'm curious to know your view on a Senco and a Nykaa as well. But Himen, within FMCG, it's buzzing today 1.5% higher. The top performing sectoral index in trade today. Is there something structurally different? And I posed this question earlier to Akshay as well. Is there something structurally different that you're seeing, given this slight bit of rally of sorts, if I can call it, in FMCG from a technical perspective?
If you look at the Nifty FMCG index, it's almost been 11, 12 weeks, and now things are suddenly starting to look up. Marico posted an all-time high. Dabur gave a move at resistance. Godrej Consumer has turned good. So frankly speaking, we haven't done much as far as the FMCG index. It's been down multi-months, and now things are looking better. So the way I see it, okay, Dabur above 514 could do something positive. There has been a technical turnaround. Traditionally, normally the markets go down and FMCG goes up. Markets don't look like going down and FMCG looks like going up. So one of the other should happen. The way I see it, there are positives very clearly on the shorter term charts. This normally percolates onto the weekly charts. That's what I've seen. So as our fingers crossed, things are beginning to look better as far as FMCG is concerned, Harsh.
Okay, when we're talking about FMCG, how can we not talk about Dabur? Dabur has been in focus all day today. I mean, you would argue that the business updates were middling. The stock is about 3.5% up. What is the bull case and what is the bear case for Dabur? Mahima is joining us with more.
Right, so I think what the street liked today about Dabur was that one statement that the management has made, and that is that they've come out and said that they are seeing an uptick in demand in terms of volume from the urban markets, which has not been the case since the past 4-5 odd quarters for any FMCG companies. So I think that is a big positive in the entire business update that came in for Dabur. But overall revenue is expected to grow in low single digits, so that's something that the street might not see positively. Now in terms of the overall performance of how Dabur has been so far, it's been a company that has had a significant amount of dividend payout. In fact, in FY25, there was a dividend payout of almost 80%, the ratio. But overall, in terms of, if we talk about the working capital days, that have significantly gone up for this particular counter, and it's gone up to 60 days in FY25. So that's something that's alarming. In terms of the overall performance of different categories, Dabur Honitus is expected to clock a growth of 40% in Q1 FY26. So that's a big deal. And in as far as my reading goes, this is because Dabur Honitus is very easily available on the quick commerce platforms, and people have been ordering Honitus through those platforms. But on the other hand, beverage as a segment has been impacted because of unseasonal rains and short summers as well. So that part of the portfolio, your real juices, might not do well this particular quarter. In terms of the international business, it's expected to post a double-digit growth in Q1 FY26. But there has been, when I was seeing the charts of investors pulling out of the counter, there are FIs which have been cutting stake in the counter. If we see March 2023, there was a 20% stake that FIs held in the counter, which has come down to around 12% in March 2025. So that's one thing that an investor should definitely keep an eye out for. Lastly, in terms of where the analyst recommendations stand, well, in terms of Bloomberg consensus estimates, there are 15 buys, 19 holds and 8 sells, but the return potential is absolutely flat where the overall target prices go. So this is with regards to the bull versus bear case of Dabur.
Okay, well, the street is very bullish on Dabur today. Himen, on the charts, how do you like Dabur compared to the others?
Looks interesting. It's playing catch up, Tamanna. So I believe it's made a medium term base, and things should start looking up. Like I said, it's just at the resistance of 514. Above that, I think it should start looking even better. A turnaround is in the offing, Tamanna.
Turnaround is in the offing. Siddharth, we were in, the business updates didn't seem that great on the face of it. But I wonder what you thought of the Dabur business updates?
Yeah, I think it was in line with expectations. The good part is that on a sequential basis, things are looking up. And especially if you look at for Dabur, the urban volume recovery, that is something that has been a key. Definitely in their so with the refreshed strategic vision and favorable conditions such as the above average monsoon, good agricultural output, easing of inflation, I think now going forward, Dabur is expected to regain growth momentum in the coming quarters, and that is what the street is excited about. I think that looks like. Plus, the entry point opportunity at the current level, stock has been consolidative, or you can say has been underperforming the overall market. And at this price point with the earnings growth recovery, I think Dabur is more of an urban play, and with the tax benefit, with the monsoon and with the inflation at low, the expectation going forward is definitely improving for Dabur much better than some of the other FMCG players.
Okay. So, one public interest story now, and I think this is important. There's a last opportunity to relaunch old physical share transfers that SEBI has offered. They've opened a 6-month special window. Mahima is with us for all of those details.
It's, as you rightly mentioned, this is a one-time special window that SEBI has opened, and this is for physical share transfer. So anybody who is holding a physical share in terms of paper share on or before 1st of April 2019 can go ahead and submit that particular piece of paper and get it dematerialized. But of course, this request is only for share transfers that were rejected because of any discrepancies or were returned because of any discrepancies. The window will be open from 7th of July, that is today, and end on 6th of January 2026. So it's a 6 months period. Now, why is this move happening, and why has SEBI actually opened this special window? Firstly, this is to facilitate ease of investing for investors, of course, to secure their rights in terms of what they've inherited from their ancestors. During the window, share transfer requests will only be processed and will be dematerialized following the transfer process. Lastly, in terms of how SEBI will be tackling this entire thing, putting up a special team to handle this entire 6 months period. The team will be furnishing monthly reports to SEBI as to which all share transfers have been received, processed and approved, and why were they rejected earlier. So all of this is happening. So anybody who is holding share in non-materialized form or non-dematerialized form and it's inherited from their ancestors, they can go ahead and dematerialize them right now in this 6 months period.
Okay, thank you so much for that, Mahima. Of course, that is in investor interest that we've taken that one up. But 3 stocks on our radar today, and we have Jasmeet here with all of those 3 which are buzzing in trade. Jasmeet.
Right, DCX system is in focus and the stock is up 3% in trade today while it gets industrial licensing approval from Karnataka. Now let's understand what is this license for. This will give them the right to produce, assemble and testing of radar system and electronic warfare system. This will also give an integration for manufacturing of aviation electronics and defense electronic system. While this is licensed, it's a 15-year tenure and this will enable them to manufacture under category A as per Ministry of Defense. While as per the order book positions, as of FY25, the order book stands at 2,800 odd crores and book-to-bill ratios are 2.63. While next is InfoEdge, companies out with the quarterly updates. The Q1 standing building is up 11%, while the recruitment business is up 9% in trade today, and the 99acre business, the real estate business, is up 16.5% in trade. While the last one on my list is Borosil Renewables, while the stock is up 4% in trade today as the German subsidiary GmbH glass manufacturer files for insolvency in Europe. The insolvency with regards to the lesser market share and reducing the solar electronic market space. While what led to this deterioration and erosion would be Chinese dumping solar manufacturers at a very underrated price. While as per FY25, the German subsidiary and step-down subsidiary accounted for roughly euro 35.30 million, and this financial loss amounting to rupees 9 crore per month will be gone from their accounting. So it's a positive for the company. That's the reason why the stock is up 4% in trade today, while now company to focus on Indian market for expansion and development. So this is all for today in stocks to watch.
Okay. So, yeah, these are some of the buzzers today. Himen, just, your technical view on some of those stocks that we're tracking right here.
Okay, as far as Borosil is concerned, Tamanna, one gets the feeling that it's been range-bound for quite some time. A lot of hope, but maybe it's flattered to deceive up till now. It spent 3 years moving sideways. It's not bearish, but somehow the breakout has been elusive. But the way I see it, if the breakout comes in, I think it could set off like a rocket. The other stock you mentioned was DCX Systems, I believe. Downside appears limited, short-term bottom in place, volume, price volume action positive, worst is almost over, a recovery is underway, Tamanna. Borosil looks extremely positive, but somehow after 3 years, we actually need for the breakout to come in, Tamanna.
On either of those counters? Remain? Is there a buy on either of the counters?
Yeah, if you have a short-term view, there's a buy on DCX. If you have the patience, and a lot of patience, Tamanna, after 3 years, we are still not sure. But yeah, looking at the price movement, I think the breakout will be outside. So if you have a view of a year or more, I think Borosil can be a calculated risk. Yeah.
What about you, Siddharth? How do you feel about both DCX and Borosil?
So unfortunately, Tamanna, we don't have coverage or view on these 2 stocks. Okay. InfoEdge is the only one that we cover.
And anything to add on InfoEdge?
Yeah, so if you look at, I think things are looking up, especially due to the momentum in recruiting, pace picking up. And even if you look at the IT companies, tech companies, the start of the year, we were a little bit unclear about the uncertainty about how things will pan out, but things have now started improving, and we are looking up in terms of recruitment, and hence that is looking up well. Plus, the management continues to invest strategically in high growth areas, positioning the business to gain from medium to long term value creation. So we believe that a decent revenue growth of about 12 to 15% over the next 2 years, plus some of the investments getting listed that could drive value. So it's a kind of an accumulation zone one can look at taking the stock on a gradual basis.
Okay, what we're going to do, gentlemen, thanks so much. Stay with us. what we're going to do is slip into a very short break. On the other side, top buy today, sell tomorrow recommendations, and along with some other buzzers, we focused a bit on FMCG, but we'll go outside of that on the other side of this very short break. Stay tuned.
जनता के पास सवाल ही सवाल है, जवाब ढूंढने को वो देखती है न्यूज और देखती है यहां तो सवालों का मायाजाल है। ऊपर से ये अलग फाइट है, कोई पूरा लेफ्ट तो कोई पूरा राइट है, बीच में मुद्दे के साथ कौन है, जनता को जवाब चाहिए। इसीलिए सवालों की परेड नहीं, मैं लाऊंगा खबरों की कचहरी। मैं शुभांकर मिश्रा, मेरे साथ देखिए कचहरी रात 8 बजे सिर्फ NDTV इंडिया पर।
It's the biggest event that markets and economy are looking at. A possible trade deal between India and the United States, which we could hear about any time soon. It will create a seismic shift in the way these two countries trade with each other. Who is going to come out on top of these hectic negotiations? Stay ahead on the story. Catch all the breaking news and the analysis only on NDTV Profit. Welcome back. You're watching India Market Open. Now, the newly listed Siemens Energy India has come out with the second quarter earnings. What stood out for the T&D player in the second quarter? Anushi is joining in for more details.
So it's a strong set of numbers that we are looking for Siemens Energy in terms of where the revenue growth is concerned. We are looking at a 57% of an uptick in terms of the revenue. Is that the company has clocked in 1,879 crore of revenue, and this is with a net profit growth of 36% is what we are seeing. However, it's also the margins which are in focus, which have shrunk to 19% as compared to 22.5% that they had seen in the last year quarter. Do note that the company follows the October to September calendar year, hence we are looking at the Q2 results of these company. But what led to this margin downtick is, if you look at cost of raw materials were up over 98%. Along with that, even the purchase of stock and trade were up almost 3 times, and higher employee benefits along with the other expenses also weighed down on the margins is what we are seeing. But brokerages, if we had seen the earlier notes in terms of where the company just got listed a few weeks ago, they continue to remain bullish in this space, especially the power T&Ds in space is what we are seeing. The company is India's largest pure power play T&D equipment player. This outshines the likes of Hitachi Energy as well, GTD as well in terms of where the market size is considered. Jefferies expects around a 40% of a EPS CAGR between FY24 to 27, and this is on the back of the industrial play, along with the operational leverage that the company will have. Even Antique had a view on this, that the T&D capex continues to remain on a stronger footing, and Siemens Energy is to be a likely key beneficiary of this. Company also has an order backlog of 15,000 crore, providing strong medium-term revenue visibility going forward. Now, Antique over years forecast a 35% of our earnings CAGR between the FY24 to 27 period. Whereas if we look at Motilal Oswal's view, they say that the expected revenue to PAT CAGR is 25 to 31% over FY25 to 27, and margins are expected to increase to 21.4%, but this is by FY27 that they are looking at. So overall, it's a good set of numbers that we are seeing is the margins wherein most of these contraction has taken place, but brokerages have continued to remain bullish on the counter.
Okay, thank you for that, Anushi. That's on Siemens Energy in terms of the numbers itself. But I want to quickly pull up on your screen the general insurance data that has come through. You have gross direct premium, which is equivalent to top line, which has grown by around 5% odd. Bajaj Allianz is the strongest growing player within that space, at least for the month of June. 17% growth is what they've clocked. Go Digit is the other one, 12% higher. And the third listed player, ICICI Lombard, has actually de-grown by 10%. Let's pull up those stocks, quickly see if there's a reaction on any of those. Bajaj Alliance or Bajaj Finserv, Go Digit and Lombard. But my reckoning is, there you go, you see a bit of a spike on Go Digit for sure with that 12% odd growth. Lombard, can we pull up Lombard please? Yeah, nothing much frankly on any of those.
Nothing much anyway. I think 0.5% down on ICICI Lombard is still more movement than you're seeing across the markets. Apart from a few outliers here and there, I mean Jayaprakash Power up nearly 20%, Godrej Consumer moving smartly today. You have some of those kind of moves, but otherwise very, very dull day in the markets today. Siddharth, is this a market waiting with bated breath for what comes next on the India-US trade deal? Is it some fear about what's cooking with Jane Street? What do you think is behind this very muted mood?
Yeah, I think, Tamanna, the biggest overhang on the market is the 9th July overhang of the US tariff deadline. And the entire street is waiting for the mini interim or whatever nomenclature we give, but a deal with US in terms of tariff that could provide a kind of a relief in the near term. Apart from that, I think the Q1 result season is just about to kickstart this week. That could be another trigger for the markets in the near term. And I think apart from that, not much of factors that market is looking for. We are already very close to all-time highs. US markets have already reached the new highs, but as we are seeing across segments, the business updates have been started coming in. So mixed kind of views, not much in terms of Q1. Definitely Q1, the overall expectation is that the quarter will be, as we step into Q1, would be one of the first quarters where we start seeing the improvement in the earnings. Last 4 quarters, we have seen low single-digit earnings growth, and this is the quarter where you can say the crossover has to happen for the markets to gain strength from here.
Siddharth, just a quick word on insurance. You've seen not too much move in all. Go Digit, I think, is showing some signs of reaction to its numbers. Just still about 0.25% down, but still slightly on the up move. Now, insurance has been a sector which has been in the spotlight after a lull. Do you think ahead of their quarterly numbers, we can expect some good results or good numbers from the insurance pack? Anything that you're liking, or you would stay away for now?
Sure, I think life insurance is something which are showing much higher growth, and even the overall margins are improving for life insurance companies because of the changing mix. If you look at general insurance, I think there is some recovery seen in the motor segment. Healthcare segment is something that is being weighed down by the transition in terms of accounting plus elevated claims. So overall, what we see is that life insurance that continues to do well is likely to report strong numbers. So an HDFC Life, SBI Life, then can do well. Within the general insurance space, I think motor insurance is something that is doing well. I would like to have a positive view on a health insurance space, but more from a long-term perspective. So you have some of the pure play healthcare, health insurance companies likes of Niva Bupa Healthcare. But again, as I said, the quarter numbers are not expected to be that great, especially as the sector transitions in terms of the accounting norms. So some of that effect will come into play, and that kind of lead into a subdued earnings for the quarter. But from a long-term perspective, I think healthcare, health insurance as a pure play, that could be a good long-term interesting play. And Niva Bupa is something that we have been liking for some time now.
Okay, thank you so much, Siddharth, for speaking with us today. Great to have you on as always. Siddharth Khemka there, on his view on the insurance space. I think another interesting and important story there is Eternal. I want to see what's happening with the Eternal stock right now, because Morgan Stanley today saw this as a mixed bag. Now, here's what's happened. There's been a leadership change in the food business. Rakesh Ranjan has stepped down as CEO after a 2-year tenure, and that's actually the end of his tenure. Aditya Mangla has stepped in as the new CEO again for 2 years. So, the announcement follows earlier reports of his planned exit. That's Rakesh Ranjan. His tenure ended on the 6th of July. And Aditya Mangla, the new food delivery CEO, is currently head of product for food ordering and delivery. He's been with Eternal since 2021. Now, as far as food delivery is concerned, it accounts for 45% of the total business. So it's a sizable chunk of Eternal. Its 3-year growth CAGR has been 30%. Currently generates 1,700 crores of annualized adjusted EBITDA. Here's how Morgan Stanley sees it. They've maintained an overweight on the stock with a target price of 320 rupees, but have gone on to say that leadership changes could have a mixed effect on sentiment. Zomato's continue to gain market share despite multiple changes. Pessimists may raise concerns around multiple changes in leadership. Optimists may look upon the change as a strong culture. Think both aspects have their merits. There has been stability at the founder level where ultimate accountability lies. I thought it was an interesting way to see it. As long as Dipinder Goyal is there, it doesn't matter who manages the rest. Having said that, the food business is a very important vertical. Dharmesh Khan joins in now on the conversation. He's head equity research, Chola Securities. Very good afternoon, Dharmesh. In fact, let me pose this question on Eternal to you first. A 2-year tenure for a CEO, does that sit right with you? Or do you think that it's a different way of doing business?
Good afternoon, Tamanna. I mean, 2-year tenure is a too short a term for a CEO position. At least 5 years should have been there. And these people are there in the business for a long period of time. So, I mean, why this trial and error kind of a concept has been adopted? So, to my mind, rather than sentiments, this can also have an impact on the earnings potential and revenue potential of this company, because too frequent changes in strategy can lead to, drawdowns on the profitability as well. So stability of trajectory is what is being desired for any upcoming business, and there I think the business itself is very disruptive in nature, and then if you are getting disruptive through the frequent changes in management, doesn't sit or augurs well with the business. Having said that, I mean, in this space, if you want to stick to a concept play on the food delivery business, this company offers you the best option. So Eternal remains a long-term buy pick from our end. We are not recommending Swiggy to that extent, but one has to see this frequent changes and how this is going to pan out. So in the short term, it's a difficult situation for them.
What do you think about it, Harsh? A 2-year tenure for a CEO's position, and to be fair, they can say it's not like we moved anyone out. This is the way we function. 2 years and then you mix things up.
Well, it's worked for them, at least up until now. So it seems like a formula which is working for them, and therefore they're implementing it.
Yeah, so you see no issue with it at all. I mean, obviously the technical view on Eternal, if you have one, but also, your view on this management style, why not?
I don't think I'm the right person to comment, but even I think so. 2 years is albeit a bit short, so I'm not sure if things can be implemented and turned around. So I would also feel that a longer tenure makes more sense. Eternal 266, 256. Things have turned a bit positive for Eternal after what I thought things were not very fine. But yeah, thing is, it's gone up for 3 months from the bottom, Tamanna. So I think it's walked into a small correction. If it closes below 256, it slips down. It's a consolidation phase in an up move, I believe. About 266, things should start looking up again.
Okay, Himin, curious to know your view on what's happening with regard to some of these amine counters. Balaji, Alkyl, both of them buzzing in trade today.
Well, frankly speaking, Harsh, if we start with Alkyl amines, it peaked in July 21, and it's been correctives from there till a few months back. So, frankly speaking, it's 4 years of a down move. It looks fabulous on technical parameters. Thing is, it has moved up for 6 months from the bottom. 1, 2, 3, 4, 5. Sorry, 5 months, and you're walking into a virtual roadblock at 2,500. But the way I see it, 4 years on a decline, I think it looks very compelling. Once again, on technical parameters. As far as Balaji is concerned, I believe Alkyl amines is more like a Rolls Royce. Balaji is more like a Maruti. So looks good. Alkyl looks very good.
Got it. Dharmesh, do you have a view?
I mean, Harsh, this is more of a trading pop to my mind because even after such a strong correction, the stocks are trading at quite high P multiples, and these are specialty chemicals used in various derivative kind of formulations. So it's a B2B kind of a play. And when the concept newly came, it did have a strong buying attraction. But end of the day, it's a commodity play, and that too, volume-wise, a very minuscule kind of a commodity play. So I would rather avoid this from a fundamental buy kind of a perspective for a year or so. Trading pops can always be there.
Okay, so that's a trading pop. Stay on, hold that thought. We're going to a very interesting development today, and I think this has been a matter of chatter all through the day, which is the UAE launching a new golden visa program, making it significantly cheaper and more affordable for all, including Indians, to gain lifetime residency in the country. My colleague Malika has all the details on the new golden visa. Malika, how much is it for? How much cheaper than before? And for how long does it give you the right to stay in the UAE?
Definitely. Thank you so much for that, Tamanna. Let me give you all the details that is. But first of all, what is the UAE Golden Visa? The UAE Golden Visa, as you can see on your screen, is a long-term residency visa that allows individuals to live and work in UAE for 5 to 10 years. But under the new scheme, under the nomination-based scheme, this could be a lifetime of a chance, and it is renewable under certain conditions. What's the purpose, if you ask, of this UAE Golden Visa? There are 4 main points. It encourages foreign investment, it strengthens the skilled workforce, it supports sectors like real estate, business, culture and innovation. Now going to the point about the differences between the traditional golden UAE visa and the new nomination based UAE visa. The first is the cost difference. Now the old property based golden visa required you to obtain a property worth 4.5 crore roughly. That was the amount that you had to invest in a real estate in UAE. But now that sum falls down to 23.3 lakh. So you do not necessarily need to buy a property. You can just buy the visa with this much amount. And the second difference is that the previous one was mostly focused on high net worth individuals and real estate investors. But this one is open to professionals like you and me, educators, YouTubers and other skilled individuals. So it just opens the number of professions and professionals that can apply for this visa. The third difference is the fact that while the old base property golden visa had only a 5 to 10 year validity which could open on some certain options and conditions applied, this one has a lifetime worth of residency. So you buy the visa and you can live there for forever. Also, the visa ends if property is sold or divided, and this was the condition applied to the old one, the traditional one. But in the new one, you do not necessarily have to maintain an asset in order to have your visa and have your, maintain the validity of your current visa. Let me take you quickly through the selection process. There are 4 key steps. The first one is that Indians can file their applications remotely through one Vasco centers or registered Rayad group. This is the consultancy that will be handling all the visa applications from India. The second is that a background check will be done for all your criminal records, anti-money laundering compliance, and also they will check your social media presence to check what kind of personality do you maintain out there. And the step 3 of is that the assessment of how the applicant might contribute to UAE's economy or society through culture, finance, trade, science or professional view. So they're basically going to check how you contribute to their economy. And the fourth one is once all of this is done, the application will be sent to the government, and then the government of the UAE will approve your visa.
Okay, interesting. Thank you for all of those details, Malika Mishra there. So, Harsh, have you done all the preparation for your application for a golden visa?
Do you want me to apply for a golden visa?
Do you think it's worth it?
Yes, so for those residing in the UAE and for those really interested in being part of or making income from that particular country, yes, it makes sense.
But so many market participants and prominent
Yes.
traders and investors are already sitting in the UAE.
Correct. So for them, it makes real good sense, right? Because they
Yeah.
don't have to invest a chunky 4 crore rupees and lock that in. Or maybe it's not chunky for them.
Yeah, but 23 lakhs is definitely cheaper than 4 crores. Dharmesh, I wonder what you think. Are those, is this all the buzz? Is that application ready for you?
No, Tamanna, I love my country, and I think there's enough opportunity here in India to make good wealth and be a good contributor to your own country's income rather than contributing to somebody else's country's wealth.
Yeah, so interesting. All right, Hemen, as we get to that leg of the show, let's get in your BTST ideas, and of course, if you have any quip or observation on the golden visa story, you're most welcome.
Sounds very tempting, Tamanna. Overtaxed country, crumbling infrastructure. No, but like Dharmesh said, I'm an Indian no matter what.
That is true. But the fact that they have reduced the rates so much of people coming in, I thought that was astonishing. I mean, it's actually right now a global talent hunt going on.
I think it's phenomenal. If I was younger, I would have definitely gone for it because it opens up a plethora of opportunities. Thing is, family, there are kids here, so too late. But sounds fabulous. Younger would definitely go for it.
Okay.
Stock that you mentioned, BTST, is Britannia. Tamanna, it's breaking out of a 6-day consolidation phase. It's a BTST, but it can be slightly longer than BTST also, Tamanna. One can buy at 50 at 70, stop loss of 50 at 50, target of 59.10, risk reward ratio 1:2.
So Britannia is the only call today?
Yep, I think Britannia is the BTST. Okay. The earlier positional calls were there, but this is the BTST.
BTST is Britannia. All right, JP Power. JP Power is a stock in focus this afternoon. It's zooming in trade. It's a subsidiary of the troubled JP Associates, for which Adani Group has emerged as a top bidder. This is something that we reported on Friday. Vishwanath Nair joins in with more details.
Right, so as we can see, about 20% up nearly in trade for JP Power. It's given a lot of stellar returns, about 1,000% up in the past 5 years alone. Primary sort of mover for the stock at this point in time is a meeting that is happening of the Committee of Creditors for Jayaprakash Associates, which is a parent company which is under insolvency at this point in time. The lenders are actually discussing all the resolution plans that they received. They received 5 resolution plans, of which, of course, Adani Group is the leader of that pack, with about a 14,000 crore offer for the entire assets that Jayaprakash Associates owns. The second in that list is Dalmia Bharat with 11,000 crore offer. So it's clearly showing up as good value for the assets that it owns. And one of the assets that it owns is 24% in Jayaprakash Power Ventures, which is a subsidiary company. And therefore, there is some amount of interest among the investors of this company as well to see how exactly Jayaprakash Associates insolvency proceedings go, who actually ends up owning this company, and thereby the impact that will have on JP Power, where you will likely see some amount of either they will sell it to somebody or they will continue owning the company and make further investments if necessary.
All right, so that's why JP Power is in focus. I mean, I don't know, Dharmesh, would you look at this as a momentum trade at all?
Yeah, Tamanna, definitely this is a momentum trade, and till the time the deal is inked, this trade will continue. But post that, it will be more back to the normal business, how the revival happens, and how the businesses which are stuck can be again brought back to on the floor. So to my mind, if I have to buy, I would buy rather Adani Enterprises and for a long-term haul. So when I say Adani Enterprises, it has to be 5 to 10 year kind of a perspective, because it's more of an incubator kind of a company for many of the businesses. So that is more attractive to me rather than from a fundamental long-term perspective, rather than buying a JP Power or a JP Associate. But yeah, definitely a momentum trade is on whenever such kind of a deal happens.
Okay. Hemen, on the charts, I mean, already huge run up. If you're holding, is this the time to exit?
I'd exit after a day or two because we are coming close to its swing high. But I believe it can go up to 28, but I'll book some tomorrow.
28. So is there a short-term trade here?
No, if the stock moves from Tamanna 13 to 24 in 3 weeks and a multi-week resistance at 24, no, it's not a fresh buy.
It's a hold if at all, and not a sell either. That's the buzz on JP Power meanwhile. But what's interesting is what's happening with the index as well. I mean, if you look at the range for the Nifty today, it's barely moved. Is this also an opportune time perhaps to build positions for whatever's coming in the next 2 or 3 days or for the rest of the week?
I think so. I think it's a lull before the storm. If you look at some of the mid caps on the small cap sectoral indices, everything seems to point towards an impending upside. Whether it takes some more time, is there a shakeout before that? I don't know. But once again, I repeat, I'd be more bullish than bearish. Things are shaping up, and yeah, it is a build up towards a higher move, I believe, Tamanna.
Okay. Want to take a couple of stocks which are really buzzing, and one of them we in fact spoke with as well. Puravankara. I mean, do you have a view with regard to a Puravankara? Perked up 4% on the back of a new project that they are planning to launch.
Okay. I don't track Puravankara very closely, but having said that, medium-term base in place, good about 300, downside limited, worst is over. I'd be more bullish than bearish, stop loss 275. I believe a recovery is underway. As of now, it's a recovery, not a rally, but it still has not run its course. Simply put, further upside.
Okay, and Dharmesh, do you have a view with regard to a real estate?
Yeah, Harsh, I mean, we did have a view where we were recommending buy on all the real estate companies, but the run-up which we have seen in most of the companies, I think it's time to take profits off the table. To my mind, for next 6 months to 1 year kind of a time frame, they will go into more of a sideways, time-wise consolidation rather than a continuity of the uptrend which we have seen. So it's time to take your profits away from real estate counters.
HUL was the other big gainer in trade today, Tamanna. It's 3% higher. It's the top gainer on the Nifty 50. Himen, do you have a view with regard to an HUL in particular? I know I've taken FMCG from you, but HUL in particular.
Well, big daddy of FMCG, playing catch up. Good about 24.20. Nothing to lose. Further upside seems like a cinch.
Nothing to lose. Sorry. So 24.20 or nothing to lose at this point either. So you go buy right now, Himen?
Yeah. It's spent 8 weeks. So 24.20 is expected to be taken out this week or the next.
HUL, the big daddy, has woken up as far as it goes, and UBS has an interesting note on it. In fact, that was our big brokerage call of the morning, because a positive note after quite a while coming in from UBS on an HUL. But another space that we should look at is India's fast-growing EMS, that's electronics manufacturing sector, which is facing a new hurdle. The government has imposed import restrictions on gold compounds. That's a key raw material that is essential for the manufacture of critical electronic components like semiconductors and motherboards. Puneet is joining in to tell us why this could be a pain point.
Well, thank you for that. So definitely it's a big restriction coming in from China, and that's largely actually bound by India, because the DGFT, which is the Director General of Foreign Trade, has actually restricted the import of gold compounding. Now, the restriction is coming in the fact that it was earlier a free, that was the tag put for importing this particular component. Now that has been now moved from a free component to a restrictive component, which essentially means that they will have to go back to the government and the DGFT and ask for special permission to import gold compounding. Now that's, as you mentioned, it's largely used in electronics as a stabilizer component, and hence it's critical in functions such as laptops, TVs, amongst others. So we could see some potential impact of that on players like Dixon Tech, Keynes Tech, as well as Amber Enterprises, and something like a Sirma as well, which are part of the television space, as well as mainly in the mobiles as well as the laptop space. So those three segments could get impacted because of this. Today we are seeing some positive move on Dixon, and that's largely led by a brokerage call from B&K, but this could be a long issue for all these EMS companies, and the likes of Dixon amongst others could be impacted because of this.
Thank you so much for that, Puneet. And Himen, Dharmesh, thank you so much for coming in, giving us those views as well. We'll let all of you go on that note. A minute and a half from close. Let's quickly zoom in. It's been a very, very range-bound day of trade, at least on the Nifty 50 index. We've been in a tight range of around 80 odd points. The Bank Nifty too, quite muted in trade this Monday. Let's look at it intraday as well on the Nifty, and that'll give us perspective. Just look at the day's high to the day's low. Quite a tight band that we've played in today. Let's look at the heat map, and within that, consumer stocks, of course, leading from the front today, and HUL within that consumer pack doing the best, 3% higher on HUL, but a Kotak Mahindra Bank also there. Asian Paints, ITC, so largely consumer. When you're looking at the losers, well, it was defense and IT under some bit of pressure. Also, you're seeing some pressure on auto. Maruti is sitting there. Hero also sitting in the red among those. Let's look at sectors, and within sectors, you'll likely see the same kind of trend playing out. FMCG, consumption were the two baskets which did the best in trade today, 1.7% higher on the Nifty FMCG. Defense, IT were the two top laggards outside of media. Metals too seeing some bit of pressure. Let's look at the broader markets, and before we look at broader markets, let's look at the advanced decline on the index. A third of a percent low on the Nifty mid cap. Very similar kind of number on the Nifty small cap as well. Again, the band was quite tight, around 120 to 130 points is what the Nifty small cap has traded in. So quite range bound in that sense. But let's look at the advanced decline and the breadth as well. And the breadth clearly worsened as the day progressed. We've closed also in a tough kind of breadth environment. That's at least what at close, it's at 1450 declines to just about 850 advances. So the breadth was quite difficult at close. Let's look now at the BSE 500, the top gainers, top losers. Those are some names for you. A Relaxo standing right up there on top, 9% higher. Some of the amine counters were in focus. Alkyl, Balaji, Godrej Consumer, we spoke about that one. Metropolis Health was up 5% as well. And Akzo Nobel also doing fairly well for itself. Borosil Renewables also up 4%. There was an announcement there. Deepak Fert, Equitas on the back of their quarterly updates, stock down nearly 6%. And then there was Jubilant Foods as well, down 4% on the back of the quarterly update. But what I'm going to do is quickly look at what are the cues to look out for tomorrow. That's the Russia foreign exchange reserves. Not much of an impact on where India markets is concerned. But those are some names for you in terms of dividend adjustments on Indian companies. The solar industry is also there, Titan, JSW Steel. But believe nothing else outside of that in terms of corporate action. I want to also quickly highlight that we spoke with TFS earlier today. The IPO opens today, so that's one piece you want to know. But let's leave you with a conversation from Travel Food Services, which is TFS, which we had with the company's management today. And with that, out of time as well on this edition of India Market Close. But that conversation.
In terms of growth, we have seen the last 2 years, coming out even out of COVID during a challenging period. No doubt the aviation industry has truly, even before that and now more so, embarked on real growth. See actually consumers, the way passenger growth is very strong. So our numbers, as you'd seen, been around last 2 years, approximately a bit over 25% growth in terms of revenue. And just probably while, talking a bit about our numbers, but just maybe the industry as a whole, looking at that, we see the growth over the next 10 years of passenger growth as an underlying element expected to be about 9 to 10% over the next few years. Coupled with that, the airport travel, QSR and lounge industry particularly is expected to go about 20%, just the industry itself. And that's the opportunity ahead of us, aside from obviously gaining market share in those areas which we would focus on business. In the industry itself, over the next 10 years, is expected to have a 20% CAGR. So I think we're in very fast-growing industry and in a superb country, as we all believe very aggressively that it's the right place to be in, no doubt. So I think all of that coming together surely puts us, hopefully, a great runway ahead.
जनता के पास सवाल ही सवाल है, जवाब ढूंढने को वो देखती है न्यूज और देखती है यहाँ तो सवालों का मायाजाल है। ऊपर से ही अलग फाइट, कोई पूरा लेफ्ट तो कोई पूरा राइट है। बीच में मुद्दे के साथ कौन है, जनता को जवाब चाहिए। इसीलिए सवालों की परेड नहीं, मैं लाऊंगा खबरों की कचहरी। मैं शुभांकर मिश्रा, मेरे साथ देखिए कचहरी रात 8 बजे सिर्फ NDTV इंडिया पर।
It's the biggest event that markets and economy are looking at. A possible trade deal between India and the United States, which we could hear about any time soon. It will create a seismic shift in the way these two countries trade with each other. Who is going to come out on top of these hectic negotiations? Stay ahead on the story. Catch all the breaking news and the analysis only on NDTV Profit.
Imports become the exception rather than the norm, and increasingly we do almost last year, for example, of the contracts that we signed of record 2,09,000 crores, 81% was awarded to the domestic industry. Our intent is to manufacture in India, preferably with design also in India.
I am so elated to be on the same screen as the Defense Secretary, and I get a chance to talk about what he said.
In certain areas, like for example, artillery guns and armored vehicles, or in some categories of missiles like the BrahMos and the Akash, we've come of age.
What Defense Secretary Sir said is 100% true, and today private industry can really increase their involvement in R&D.
I am very proud to say that we make in our categories that we have been supplying to our defense forces some of the best platforms in the world.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold CDSL for the long term? Buy, sell or hold?
The answers you need, straight from the experts.
Callers from India and across.
Hello and welcome. You're watching Market Express and I'm your host Himakshi Bahugna. Now let's get straight into the show. Viewers, Indian equity indices traded in a narrow range to end on a flat note with Nifty at 25,450 levels. Sensex also ended the day little changed around 83,400 levels. Most sectors ended the day in the red. Defense, media and IT were the top laggards. FMCG consumption remained resilient. 8 oil-producing nations of the OPEC Plus alliance agreed to increase their collective crude production by 548,000 barrels per day. Now, oil prices slipped after this announcement. Brent crude futures fell 0.4%, while US West Texas Intermediate crude, that is the WTI crude, was down 1%. So these countries have been unwinding 2.2 million barrels per day of voluntary production cuts, which are separate from the wider OPEC Plus strategy. Meanwhile, Goldman Sachs said that it expects OPEC Plus to lift oil production quotas by 550,000 barrels per day in September. This is as they look to normalize spare capacity amid resilient global oil demand. Godrej Consumer Products expects a robust Q1, with its standalone business set to deliver high single-digit value growth. Now, the home care segment is poised for double-digit value and volume growth, while personal care sees low single-digit growth. Consolidated revenue is also projected to rise double digits with high single-digit volume growth. On to the brokerage verdict now. Macquarie maintains a neutral rating on Godrej Consumers with a target price of 1,200 rupees. Ahead of Q1 of FY26, the brokerage highlights a healthy domestic volume performance, projecting a 5% volume growth and a 10% rise in consolidated sales. So EBITDA is expected to grow 7% year-on-year, though margins will likely remain under pressure. Dabur reports improving volume growth in Q1, supported by strong urban demand and sequential recovery. However, beverages segment faced challenges due to unseasonal rains and a shorter summer season. The company expects consolidated revenue to grow in low single digits, with profit growth slightly lagging behind. Home and personal care categories, including oral, home and skincare, are set to perform well. Healthcare and juices are projected to deliver double-digit growth, with Dabur Honey Dust expected to grow over 40%. Also, Dabur's international business is poised for double-digit growth on a constant currency basis. Metropolis reports a strong start to the year, with Q1 revenue soaring 23% year-on-year. The company's specialty segments showed impressive growth, climbing 15%, while the True Health Wellness surged ahead by 20%. So business-to-consumer revenues also rose by 15%, reflecting robust demand. Notably, specialty revenues led the charge with a remarkable 35% increase. Overall, Metropolis' consolidated revenue growth of 23% underscores its expanding market presence and solid performance in the first quarter. The Shipping Corporation of India has signed a memorandum of agreement to acquire two second-hand very large gas carriers, or the VLGCs, each with a cargo capacity of approximately 82,000 cubic meters. So these vessels are expected to join SCI's fleet in the second quarter of the financial year of 25-26. So this strategic acquisition aims to expand SCI's tonnage and strengthen its position in the growing liquefied petroleum gas, or the LPG transportation market. So the addition of these VLGCs will enhance SCI's capability to actually meet the rising global demand for cleaner fuel alternatives, boosting its LPG carrying capacity significantly. So the deal is valued around $127 million and is projected to add about 260 crore rupees in the annual revenue at current charter rates. Shyam Metallics reports a mixed performance in Q1 sales, with overall sales declining between 9 to 18%. So stainless steel sales saw a significant drop of 18%, totaling 19,813 metric tons. On the brighter side, sponge iron sales rose by 5%, reaching 2.56 lakh metric tons. However, carbon steel sales fell by 9% to 4.1 lakh metric tons. Notably, carbon steel remains a key revenue driver, accounting for nearly half, 49% of the company's revenue in fiscal year of 2025. So the company faces challenges in stainless and carbon steel segments, while sponge iron shows modest growth. Senco Gold shines in Q1 of FY26, with total revenue jumping 28% year-on-year, driven by a 24% rise in the retail sales. So the company's same-store sales grew 19%, supported by strong festive demand across the key regions. Diamond jewelry sales surged 35%, while all gold exchange contributed a significant 40% to total sales. So gold prices increased 5% quarter-on-quarter and 32% year-on-year, yet consumer demand remained robust, especially for 14,000 and 18,000 jewelry. So Senco also expanded its footprint by adding 9 new showrooms, taking the total to 179 outlets nationwide. Development reports a robust order book of 1,261 crore rupees as of June 30th for Q1 of FY26. During the quarter, the company secured cumulative new orders worth 264 crore rupees, while successfully executing orders valued at 231 crore rupees. So the closing order book reflects a strong pipeline, largely driven by orders from the oil and gas sector. This solid order inflow and execution underline development's steady growth and continued focus on key industry segments. Tata Steel has received a demand letter from the Deputy Director of Mines, Jaipur, seeking compensation of 1,903 crore rupees. So the notice covers the period from July 2023 to July 2024 and alleges a shortfall in dispatches from the Sukinda chromite block. Tata Steel, however, disputes the claim, stating that the demand lacks any legal justification.
The company has announced plans to challenge the government's claim through appropriate legal channels. Jubilant Foodworks reports a strong performance with consolidated revenue rising 17% year-on-year to 2,261 crore rupees. The company added 73 new stores during the quarter, expanding its total network to 3,389 outlets. Domino's India same-store sales growth stood at an impressive 11.6%, while Domino's Turkey posted a modest 2.2% growth. Mahindra Lifespace launches a new 2,500 crore project in Pune and unveils a new tower at Mahindra Citadel, offering premium 1 BHK homes. So this launch marks the latest phase in their flagship development, continuing the momentum from earlier successful phases. RVNL receives a letter of acceptance from Southern Railways for upgrading the electric traction system. The 143 crore project is set to be executed over a period of 2 years, marking another strategic win in RVNL's growing portfolio of infrastructure work. Cochin Shipyard signs a memorandum of understanding with HD Korea Shipbuilding and Offshore Engineering. So the partnership focuses on long-term cooperation in shipbuilding and maritime development. With KSOE's expertise in the commercial and naval platforms, the alliance supports India's Maritime Vision 2030 and Amrit Kal Vision 2047, underpinned by a $250 billion Maritime Development Fund. UBS remains bullish on HUL, maintains a buy with 2,800 target. Now, the brokerage firm sees a compelling risk-reward setup for Hindustan Unilever, expecting a strong rebound in H2 of FY26 and continued earnings momentum into FY27. So, UBS says that while parts of the company portfolio need fixing, HUL's dominant scale and improving growth outlook support the valuation. Jefferies maintains buy on IndusInd Bank with 920 rupees of target despite a 3% quarter-on-quarter dip in the deposits and a contraction in loans. Jefferies remains optimistic. So brokerage highlights limited deposit outflows and the removal of the negative credit rating watch as positives that could support investor sentiment. On the other hand, Morgan Stanley stays underweight on IndusInd Bank with a target price of 750 rupees. The company's Q1 was muted, with loan growth under pressure. Morgan Stanley expects a gradual earning recovery from Q2 but flags concerns over the shrinking share of high-margin loans and uncertainty around the new CEO. Morgan Stanley stays overweight on Jubilant Food. Target price at 781 rupees. The company's Q1 performance meets expectations with 11.6% like-for-like growth, marking the third straight quarter of double-digit gains. So the top line is driven by strong same-store sales and a 10% year-on-year rise in the store count, reinforcing confidence in the growth trajectory. Morgan Stanley maintains overweight on Nykaa with the target price of 225 rupees. The company's Q1 performance is in line with beauty growth holding strong and fashion showing sequential improvement there. So net revenue is expected to rise in the mid-20% range, driven by robust performance across businesses, including House of Nykaa brands. Eternal, Zomato's parent company, has announced a leadership change in its food delivery business. Rakesh Ranjan has stepped down as the CEO after a 2-year tenure effective July 6. Aditya Mangla, currently head of products for food ordering and delivery, has been appointed as a new CEO for a 2-year term. Following board approval, this transition aligns with earlier reports of Ranjan's planned exit. B&K Securities has initiated coverage on Dixon Tech with a buy rating and a target price of 18,946 rupees, signaling strong growth potential. So the brokerage highlights Dixon's unique position to capitalize on the electronics outsourcing trend, driven by new customer additions and component manufacturing. B&K projects a robust 42% revenue CAGR and 69% of PAT CAGR over FY25 to 27, fueled by Dixon's scaling operations and strategic expansion. Prestige Estates has strengthened its control over 2 subsidiaries through recent acquisitions. So the company's arm acquired a 49% stake in Prestige Notting Hill for 300 crore rupees, bringing its ownership to 100%. Also, it purchased a 48.99% stake, which is close to 49% stake in Prestige AAA Investments for 25.6 crore rupees, increasing its stake to 99.99%. US-India trade talks are stuck with no more rounds left for a small deal. So an interim agreement might cut tariffs on some goods with reciprocal exemptions possible. India won't budge on agriculture or dairy. Tariffs could revert to earlier levels if no deals is reached, extending talks. So India pushes for labor-intensive sector benefits, but sectoral tariff exemptions are unlikely in a mini deal. Both sides hope for a bigger trade agreement later. The Securities and Exchange Board of India proposed new governance rules for market infrastructure institutions like stock exchanges, but faced objections. SEBI suggested appointing 2 executive directors as key personnel reporting to both MII boards and SEBI. So stock exchanges argue that this dual reporting could weaken the managing director's authority and create confusion. The lack of clear roles for these directors raises concerns about the accountability. SEBI aims to strengthen oversight due to past governance issues, but exchanges worry about the disrupted leadership. Public comments are due soon, and SEBI may revise the plan. Puravankara is set to redevelop 8 societies in Mumbai's Chembur with a gross development value of 2,100 crore rupees and a potential of over 1.2 million square feet. So in its FY25 business update, the company reported a 15.3% decline in the pre-sales to 5,006 crore rupees from 5,914 crore rupees year-on-year. However, collections rose 9% to 3,937 crore rupees from 3,609 crore, and average price realization increased 10% to 8,830 per square foot. Borosil Renewable stock surged 4% today following news that its German subsidiary GmbH Glass manufacturer Brandenburg GmbH filed for insolvency due to deteriorating European solar market conditions. So the filing, prompted by Chinese solar module dumping, ends monthly losses for 9 crore rupees with a total exposure of 35.30 million euro as of March 2025. So the company will now prioritize expansion in India's booming solar glass market. DCX Systems has received a 15-year industrial license from the Karnataka CES office, enabling production, assembly and testing of the radar and electronic warfare systems, along with avionics and defense electronic equipment. So the license granted under the Ministry of Commerce and Industry allows manufacturing of Category A classified items as per the Ministry of Defense. So with an order book of 2,855 crore rupees as of March 2025, with a book-to-bill ratio of 2.63 times of FY25 revenue, DCX strengthens its position in India's defense sector. Info Edge posted robust growth in Q1 of FY26. Standalone billings rose 11% year-on-year to 644 crore rupees. The recruitment solutions segment, including Naukri.com, grew 9% to 470 crore rupees, while the 99 acres real estate platform saw a 16.5% surge to 94.4 crore rupees, reflecting strong performance across the key verticals. French IT giant Capgemini will buy India-based WNS for $33.3 billion in cash to boost its AI capabilities. So the deal at $76.5 per share offers 17% premium. So it aims to strengthen Capgemini's AI-driven targeting growth in the US market. WNS is a global business process management company based in India, offering digital transformation services to over 600 clients, including Coca-Cola and T-Mobile. So the acquisition is expected to increase Capgemini's earnings by 4% in 2026 and 7% in 2027. Both boards have approved the deal, set to close by year-end, pending approvals. Dabur Hussain Rana, a key conspirator in the 2008 Mumbai attacks, has confessed to being a trusted agent of the Pakistan Army and ISI during NIA interrogations. So extradited from the US in April 2025, Dabur Rana admitted to being in Mumbai during the 26/11 attacks, providing logistical support to Lashkar-e-Taiba's David Headley. So his revelations implicate ISI officers Major Samir and Major Iqbal, hinting at a broader conspiracy involving Pakistan's intelligence network. Harpreet Singh alias Happy Pasya, a wanted Khalistani terrorist linked to 14 to 16 grenade attacks in Punjab, is set to be extradited from the US to India. So arrested in Sacramento on April 17th of 2025 by the FBI and ICE, Pasya faces charges under the UAPA for orchestrating terror attacks. The NIA, which had 5 lakh bounty on him, and Punjab police are coordinating his extradition, expected soon under tight scrutiny. Monsoon fury has claimed 78 lives in Himachal Pradesh since June 20th, with flash floods, landslides and cloudbursts devastating Mandi, Kangra and Chamba. Infrastructure damage exceeds 400 crore rupees, with 269 roads closed and hundreds of homes destroyed. In Uttarakhand, 4 districts, Tiri, Uttarkashi, Rudraprayag and Chamoli are on the high alert for landslides due to heavy rain forecast. So rescue operations are underway, with authorities urging caution. BRICS condemns Pahalgam terror attack, unilateral tariffs and strikes on Iran. In its Rio declaration, the BRICS bloc strongly denounces the Pahalgam terror attack and calls for zero tolerance on terrorism. The group also criticizes unilateral tariffs and military strikes on Iran, while notably avoiding direct mention of the US President Donald Trump. The declaration targets Israel's actions in the Middle East but steers clear of censuring member nation Russia. US President Donald Trump issues a sharp warning declaring that any country aligning with the anti-American policies of the BRICS bloc will face an additional 10% tariff with no exceptions. So the statement posted on his Truth Social account follows BRICS condemnation of unilateral tariffs and military actions. So while Trump doesn't specify which policies he deems anti-American, the move signals a hardline stance as global trade tensions escalate. China has announced that the BRICS grouping is not seeking confrontation. The statement comes as a direct response to President Donald Trump's threat of imposing an additional 10% tariff on nations aligning with what he calls the bloc's anti-America policies. The Chinese Foreign Ministry spokeswoman Mao Ning reiterated that trade and tariff wars have no winners and protectionism offers no way forward. Hopes for a Gaza ceasefire rise as Israeli PM Benjamin Netanyahu meets US President Donald Trump in Washington to discuss a 60-day truce and hostage release deal. So indirect talks resumed in Qatar, but challenges remain. Palestinians fear renewed conflict, while hostage families demand a full agreement. Trump pushes for progress, leveraging recent Iran strikes. Netanyahu, bolstered by domestic support, may have room to negotiate despite far-right opposition. Hamas, weakened by Iran's losses, could make concessions. Trump seeks to advance broader Middle East peace efforts, including Israel-Syria and Israel-Saudi talks. Well, with that, viewers, it's a wrap on Market Express, but please stay tuned to NDTV Profit.
जनता के पास सवाल ही सवाल है, जवाब ढूंढने को वो देखती है न्यूज और देखती है यहां तो सवालों का मायाजाल है। ऊपर से ये अलग फाइट, कोई पूरा लेफ्ट तो कोई पूरा राइट है, बीच में मुद्दे के साथ कौन है, जनता को जवाब चाहिए। इसीलिए सवालों की परेड नहीं, मैं लाऊंगा खबरों की कचहरी। मैं शुभांकर मिश्रा, मेरे साथ देखिए कचहरी रात 8 बजे सिर्फ एनडीटीवी इंडिया पर।
It's the biggest event that markets and economy are looking at. A possible trade deal between India and the United States, which we could hear about any time soon. it will create a seismic shift in the way these two countries trade with each other. Who is going to come out on top of these hectic negotiations? Stay ahead on the story. Catch all the breaking news and the analysis only on NDTV Profit.
Imports become the exception rather than the norm, and increasingly we do almost last year, for example, of the contracts that we signed of record 2,09,000 crores, 81% was awarded to the domestic industry. Our intent is to manufacture in India, preferably with design also in India.
I am so elated to be on the same screen as the Defense Secretary, and I get a chance to talk about what he said.
In certain areas, like for example, artillery guns and armored vehicles, or in some categories of missiles like the BrahMos and the Akash, we've come of age.
What Defense Secretary Sir said is 100% true, and today private industry can really increase their involvement in R&D.
I am very proud to say that we make, in our categories that we have been supplying to our defense forces, some of the best platforms in the world.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks,